Hello, everybody, and welcome to problem 7-4, bad debt reporting. From inception to operations, Fortner had provided for uncollectible accounts under the allowance method. The provisions are recorded based on analyses of customers with different risk characteristics. Bad debts written off or charged to the allowance account. Recoveries previously written off over here. So the balance in the ADA was $130,000 as of January 1st, 2020. Okay. During 2020, credit sales totaled $9 million. The provision for doubtful accounts was determined to be $180,000. Okay. So this is kind of funky, but what this is telling me, and I would never ask you this on an exam, is they're basically saying they recorded bad debt expense based on credit sales. So what they did was they hit bad debt expense, and they credited the allowance for doubtful accounts right up here for $180,000. So right over here, this is my provision for bad debt. This is $180,000. Okay. So then when I have an account receivable write-off, when I write off an account receivable, I debit the allowance for doubtful accounts and I credit accounts receivable. So here it tells me that 90,000 of bad debts were written off. And then recoveries of amounts previously written off were 15. If I recover AR that was previously written off, I reinstate the receivable, and then I credited the allowance. Then I show the cash being collected and I reduce the receivable. So the way that's going to impact my allowance for doubtful accounts, it's going to be here as a credit for $15,000. Okay. Fortner installed a computer system in November, and an aging was prepared for the first time as of December 31st, 2020. So here you got the aging schedule. So we'll say 11 to 12 of 2020, July through October, January to June, and then prior to 1/1/20. This is $1,080,000. And typically what we would do is we would basically say, okay, we're going to take each dollar amount, multiply it by the category. We then add up these amounts, and this becomes my ending balance right here. However, based on the review of collectability of the account balances here, additional receivables totaling $60,000 were written off. Okay, so of this 150,000, I wrote off another 60,000. So this amount here is going to be 90,000, or 150 minus the 60,000, or the 90,000. So if I wrote this off additionally, so now when I look at this, this becomes a little bit more palatable. My ending balance in the allowance for doubtful accounts is going to be $263,600. And now this becomes a game. Basically, prepare a schedule analyzing the changes in the allowance. I would just do this on a T account. That's fine. Prepare the journal entry for the year-end adjustment for this. So what they're asking for here is that what they want is they want the entry that you're going to be putting in here to record bad debt expense. So I've got 130 plus 180 plus 115 minus 90 minus 60 is 175,000. When I take my existing balance of 263 What do I need to do to get there? This is going to be my entry here for bad debt expense. Always want to check my work. I add up 130, 180, plus 15, subtract 90, subtract 60, and I've got to get to that 263, 600. So when I record bad debt expense, this will be here at the end of the period. And this will be here for 88,600. And that's what I would do, is I would go through over here and make that final adjustment. So that's how we go through and handle this type of question. And this is problem 7-4. See, it's not nearly as long as problem 7-9, but you haven't seen that odyssey yet, so enjoy. We'll talk soon.